Hello everyone, I warmly welcome you all to this session. I am BIJU M, Assistant Professor, Department of Commerce, Christianity University. It is my pleasure to guide you through the today's topic. In this session, we will be discussing an important topic in cost accounting, namely contract costing. Contract costing is a method of costing applied mainly to long-term construction contracts such as building roads, bridges, dams, and other large projects. Unlike job costing, contracts are usually executed over a long period of time and involve substantial costs, material, labor, and machinery. Understanding the contract costing helps us to accurately determine the contract cost, calculate a profit, and manage large scale project efficiently. This topic is very important from both academic and practical perspective, especially for students of commerce and management. Let us discuss the meaning of contract costing. Contract costing, also known as terminal costing, is a special form of job costing used for large scale and long term projects. Under this method, each contract is treated as separate cost unit and a separate account is maintained for every contract to determine the cost incurred and the profit or loss earned on that contract. This method is mainly used where the work is carried out according to the specific requirement of customers and usually extends over more than one accounting period. We have one definition. According to the Institute of Cost and Management Accountants, ICMA London, it's defined. Contract costing is defined as that form of specific order costing which applies where work is undertaken to customers' special requirements and each order is of long duration. Let us discuss some of the features of contract costing. So here the work carried out at the contractor's site. In contract costing, the work is executed away from the contractor's premises and is carried out at the customer's or contractor's work site. This is common in construction and engineering contracts where on-site execution is essential. Second one, it's a large and long duration contracts. A contract is generally a large scale project and takes long time to complete. Such contracts may extend over more than one accounting period, making cost tracking and profit recognition more complex. Limited number of contracts. Since each contract involves huge investment, labor, and resources, contractors usually undertake only a small number of contracts during a financial year. It's high risk and uncertainty. Contract work involves considerable risk and uncertainty due to factors such as changes in material prices also, labor cost, weather condition, technical difficulties and possible delay also because of many reasons. Each contract treated as cost unit. Every contract undertaken is considered a separate cost unit. All costs related to a particular contract are accumulated and analyzed independently. And here separate contract account also for that. A separate account is opened in the books of contractor for each contract to ascertain the total cost incurred and profit or loss earned on that specific contract. Recognition of notional profit in long-term contracts. When the contract are of long duration, a portion of notional profit is transferred to the profit loss account each year based on the progress of the physical work completed. Special purchase of material. Most of the material required are purchased specifically for a particular contract and these materials are directly charged to respective contract account also. Direct nature expenses. Most of the expenses in this contract account or this contract it is a direct and here expenses incurred in contract costing are mostly direct expenses such as material, wages, electricity, telephone charges, insurance and other site related costs. Stage wise payment by clients. The payment from the client are made installment at the different stages of completion of the contract. This payment are usually based on our certificate issued by an architect or engineer, so that is appointed by the contractee. Use of specialized subcontractors also. In certain contracts, some of the small works, it's like a specialized activities like electrical work, plumbing, welding, or glass fitting, contractors often engage expert subcontractors to ensure the quality and efficiency. So, by the way, this contractor can engage in their own activity, their core work and all. Use of plant and equipment. Plant and machinery required for the execution of the contract may be purchased or hired specifically for the contract period and charged accordingly. To summarize, the contract costing focuses on the costing of large contracts that extend over more than one accounting period. It helps in proper cost control, profit recognition, and financial reporting of long term projects. A clear understanding of this concept will strengthen your foundation in cost accounting and prepare you for real world business application. With this, we come to end of today's session. Thank you for your time and attention. Thank you and wish you all very best your learning journey.